Hey guys, and welcome back. In today's video, we are going to be talking about why Bitcoin is most likely going to rally all the way up to at least $130,000 over the course of the month of October. We made a prediction about a month ago that Bitcoin would hit $118,000 by midnight on September the 18th. Then it did exactly that. But on the same day that we made that prediction, we made a prediction that Bitcoin would rally to $130,000 by October the 15th. Today, we're going to break down whether or not Bitcoin is still going to be able to hit that price target, and I personally believe that it is. Some of the events of the last 72 hours have led me much farther in that bullish direction, and today I'm going to be showing you exactly why I think a major breakout is coming on Bitcoin very soon. So, without much further ado, let's go ahead and dive right on into it. The very first thing we need to talk about is this very powerful bounce that we saw over the weekend. As you can see right here, Bitcoin dropped all the way down here on Friday to approximately $108,680. Over the last few days, though, we have been rallying back up to, and recently this morning, above the 20 daily exponential moving average. This is incredibly important because this is the gateway to $118,000, which was our local resistance that we set about a week ago, which is in and of itself the gateway to our second price target, $130,000 by October the 15th. So jumping on over here to kind of a cleaner chart, I want to show you what exactly happened, some of the good things that took place over the weekend, some of the bad things that took place over the weekend, and then we'll kind of tee up for where we're going from here. The first thing is that we did manage to set a higher low above the low that we set here in September. The reason that this is so incredibly significant is because it means that we are going to have a bullish September. This bottom was set at the very end of August, very beginning of September, so we have a very easy setup for a bullish September. All Bitcoin has to do is stay above $107,000. I don't have the chart in front of me, but you've probably seen it. September is historically, seasonally, the worst month for Bitcoin. Generally, over the last 14 Septembers or so, Bitcoin has been negative, and I want to say 11 of them. So Bitcoin being bullish in September is incredibly important because we're moving into October, Moonvember, and blow off top December, right? And so if Bitcoin has a bullish September, that almost always means that we're going to have an extremely powerful October and November. We've got lots of technical reasons, lots of fundamental reasons we need to cover, so let's dive right back on into it. Bitcoin bouncing here and rallying up to 113.5 as we approach the end of the month is incredibly important because at this point, it's almost a foregone conclusion that we're going to have a bullish September. There's only a day left in September. There's no 31st in September. There's only the 30th. So we have the rest of today. We have all of tomorrow, and then when we wake up on Wednesday, we will have the September monthly candlestick closed. And if it manages to close green, which is what it's starting to look like, then that almost certainly means that we're going to have the extremely bullish Q4 that we were all expecting. On top of that, if Bitcoin manages to close the daily chart today above approximately $113,000, that will mean that we have closed above the 20 daily exponential moving average. If you'll remember, we were looking at breaking above this moving average just a few days ago, and we were talking about long entries right here. Unfortunately, Bitcoin actually rejected off of the 20 daily EMA. As you can see right there, we rejected off of it, okay? And so since we rejected off of it, this little bounce here at 111 did not come to fruition. We had to drop farther. And so if Bitcoin does manage to close above the 20 daily exponential moving average, that would be incredibly bullish indeed for Bitcoin. Now, there is one complication with the way that this is all playing out, and that is that, of course, all of this just had to go and happen on a weekend, didn't it? Now we have a CME futures gap down here between 110 and 111. So I don't think that we're necessarily out of the woods just yet because that CME futures gap is probably going to need to get filled. That said, we do need to keep in mind that not all CME futures gaps get filled, and there is one down here at $92,000 that will most likely at this point either be filled in the bear market or possibly never filled at all. Remember, guys, I've been doing analysis on the Bitcoin market since long before BTC 1 exclamation point came out, so I remember some of these CME futures gaps. There is one also down here at $20,000 to $21,000. I would bet anything that this is never getting filled. Bitcoin is never going back down to $20,000. You can take that to the bank. Actually, I guess you could take it to your private wallet, right? Anyway, all CME futures gaps don't have to get filled, but this one is a little bit concerning because we're not that far away from it. So a short-term correction back down to 110 is something to be on the lookout for, and it does not necessarily mean that the rally up to 130 that we've been talking about is out of the picture. Now, the thing I'm excited about is that if Bitcoin does manage to bounce here, then basically what that means is that we've built this giant lopsided inverse head and shoulders pattern. It's ugly, but it does the job. And I mean, come on. you subscribe to this channel. You've got to understand. Ugly, but does the job, right? I mean, come on, that's just simple. Anyway, it's ugly, but this inverse head and shoulders pattern does the job. It gives us a price target if we were to break out right here to approximately, as you can see, $130,000. Boom. There's your price target. So very excited about that. If Bitcoin is able to get back up to 118, that's going to be very exciting. Bitcoin first, though, has to keep above the 20 daily exponential moving average, which sits right here. And then it also needs to break through the 0.382 Fibonacci, which is at $114,000. That is also the local level of resistance that we set here on Wednesday, September the 24th, last week. If we break through 114, then the next stop would be 116, which is the 0.5 Fibonacci, and then the next stop would be 118. If we break through 118, this Fibonacci golden pocket, all bets are off. Time to enter into 50x longs and hold them till 130, more or less. Of course, that's not financial advice. Be careful, but that is where we would be looking at taking some very strong, very powerful longs if Bitcoin did break through $118,000. Now, once again, it is possible that Bitcoin needs to fall over here, fill that semi-futures gap, and then bounce. And that might look something like this. So don't be surprised if this week there's a lot of piddling around and Bitcoin takes its time. But eventually, by the 15th of October, I expect the Bitcoin will hit $130,000. At this point in time, it might be closer to the end of October, but I do think it's coming, and I think it's coming very soon. So those are the technical reasons why I'm very excited. But I want to go over some of the reasons that I'm excited that have to do with the fundamentals. And one of them has to do with gold. Gold is flying, absolutely flying. There's a lot of reasons for this. One of the reasons is that the nation of China is trying to become the global custodian. The main reason that they're trying to do that is because they are trying to compete with the United States, and also because they're trying to compete with their regional rival, which is India. India is more or less the global custodian. China and India have not gotten along in, I don't know, 4,000 years, and that hasn't changed any time recently. They want to beat India at their own game, and so China is trying to be the global custodian. So there's a bit of a gold arms race going on around the world right now, and at the same time, you have a crisis of confidence in the United States dollar. We've seen Treasury rates just continue to rise alongside. We've just seen Treasury rates continue to rise as we have seen, let me say, back up, sorry. We've seen Treasury rates continue to rise even after the Fed has cut interest rates, which is something that you typically don't see. You typically don't see Treasury rates go up after the Fed rate cut because people are theoretically gaining more confidence in the economy. But we've had this crisis of confidence going on with the United States dollar, with the Fed, which is a good thing because the Fed is a cartel run by people that are trying to steal from you. We know this by now, right? Let's go ahead and bring the soapbox out, stand on it, say a few words, put it right back under there, and get back on topic. But the point is, there's a crisis of confidence with the United States dollar, which on top of this global gold arms race is leading gold to the absolute moon. But Jeb, what's the point of all this? Well, gold can't run forever. I love gold. Gold's great. Gold's the best. You know, gold's second best to Bitcoin, in my opinion. I think gold's fantastic, but it can't run forever. If you look at the monthly chart RSI, gold's RSI on the monthly chart is the highest that it has been in 45 years with a Z. It's almost 90. The technical analysis does not lie. It's going to correct, guaranteed, at some point. Now, it might hit 4,000, it might hit $4,200 an ounce first, and it will probably go to $10,000 an ounce. In fact, I'll just go ahead and say it. It's definitely going to go to $10,000 an ounce by the end of the decade, probably $15,000 an ounce. But at some point, it's going to take a correction. And in past, when gold has rallied up to these levels, it's corrected for between 6 to 12 months, right? Over and over and over again, every time. And so while there is a crisis of confidence with the United States dollar, and that's leading a lot of investment into gold. Gold's got to stop at some point. Jeb, why the hell are we talking about gold? I thought we were here for Bitcoin. What gives? Like, what? You just completely switched. Where are we? We took a wrong turn somewhere. The reason we're talking about gold is because the only reason that Bitcoin is not at $200,000 right now is because everybody who wants hard money is buying gold, because there's a blow off top going on in gold. But as we've seen in past, when the big dog is having his blow off top, that means the second youngest brother is sitting in the wings. We've seen that time and time again with Bitcoin and Ethereum. Whenever Bitcoin is having a blow off top here, you see a massive rally on Ethereum happen as soon as Bitcoin is done. As soon as Bitcoin is done taking all the attention, it goes into a massive rally, right? So you see this here. We saw Bitcoin go on this massive bull run, right? It's going to be easier to see from the daily chart. You see Bitcoin, or let's say the 3 daily chart. You see Bitcoin go on this massive, massive run in 2017, right? Massive run. And then Ethereum follows after. It doesn't look like it's after, but it is. Ethereum hits all-time high a full month and a half after Bitcoin back here. Same thing with the last cycle. We see that Bitcoin runs like crazy. We see it hits all-time high. Little while later, Ethereum hits all-time high, right? Ethereum follows Bitcoin. What's the point here? Well, Bitcoin follows gold. Okay, so gold, as it stands, is still the international reserve currency. Jeb, no, it's not. The dollar is. Bullcrap. The gold is. It is. It is. People base how much inflation is going on in fiat currencies based on how much gold is being devalued against that currency. Capiche? Gold is still the world reserve currency. It's just not the official world reserve currency. So if we're looking at currencies, gold is the top dog. Bitcoin is next. Ethereum comes after that, and then you have all the altcoins, right? So when gold moves, Bitcoin follows. We have seen this happen time and time again. And it's a big part of the reason why Bitcoin's about to go into a giant rally, because gold can't run forever. And it's going to stop at some point, and it's going to stop at some point in the next couple of months. And I will show you that just to go ahead and prove it to you. Whenever gold runs, let's just go ahead and delete our whole chart real quick. Whenever gold runs here, right, Bitcoin runs after, right? Here's the gold run. Here's the Bitcoin run. You see that? Here's the gold run. Here's the Bitcoin run. Okay? What are we seeing? Bitcoin's running while gold is running. Does that sound very good for Bitcoin? Not necessarily, because a lot of the attention that would otherwise be on Bitcoin is on gold. There's a crisis of confidence when it comes to fiat currencies, and so people are buying into hard assets. They're buying into gold first, they're buying into Bitcoin second. But gold can only rally for so long, and the further it rallies, the worse the parity gets between BTC and XAU, right? XAU. The worse the parity gets. And so Bitcoin is still undervalued compared to gold. Well, that's not going to continue because we know the long-term trend that Bitcoin outperforms gold by roughly 2 to 3x. So Bitcoin is going to break out of this chart right here, this ascending triangle pattern that Bitcoin finds itself in right here. This is the Bitcoin over gold chart. Bitcoin is going to break hyper bullish out of this, and we're going to go from 30, where we are right now, up to like 80. By the way, I've seen this before. I saw it on Ethereum almost a decade ago. Ethereum had this massive ascending triangle pattern. Let's see, most of the charts don't even go that far back. Let's see if we can find one that does. Yep, this one doesn't. Coinbase doesn't go that far back. Let's see if Bitstamp does. Bitstamp kind of does. Yeah, here we go. So on the Ethereum chart, I remember this. We had this ascending triangle pattern back in 2017. Right here. Oh yeah, that's a great looking ascending triangle pattern. Do you ever wonder what happens after that? Oh, okay, well Ethereum just goes ahead and rallies 250, 300% out of it. So that's what you're going to see happen on Bitcoin. Bitcoin is going to take the reins from gold at some point in the next few months. And then when that happens, you're going to see a massive, massive, massive rally on Bitcoin. So technically speaking, short term, let's recap. Short term, we have a CME futures gap down between 110 and 111. More likely than not is going to need to be filled. That's going to put the brakes on the bulls, unfortunately. Not too thrilled about that. That said, it does mean that if we drop back down to 110 and we bottom at 110 just because we're filling the CME futures gap, that's a very obvious long entry. Just set your stop loss like 1% below that, go into a long, and then it's a great risk to reward ratio. So again, we're doing a recap here. I want to give you kind of a picture of what that looks like, right? If Bitcoin falls back down here to fill the CME futures gap, it's a very, very, very simple long. All you got to do is do something like this. Enter around, I don't know, 109.5, something like that, right? Put your stop loss down around 107. Put your exit. You can do a big like 10x, like low leverage trade and just hold it till 125. Very simple. If we fall back down here to fill the CME futures gap, which is roughly here, that's an excellent entry price. You optimize your entry so well that you can afford to have a little bit more of a wide stop loss, and you can afford to hold it for a long time because you got such a solid entry. If we drop back down to that level to fill the CME futures gap, I personally think that would be a fantastic entry. And by the way, it would also build an inverse head and shoulders pattern right down here. Okay, so cool. So that's the first part of our recap. Second thing. The technicals, in my opinion, are pointing towards a rally above all-time high in October. We've seen this happen because we have a bullish September, and we've also seen it happen because Q4 is typically the most bullish for Bitcoin. On top of that, the market in Bitcoin, at least, has not yet priced in that we're going to have 2 more rate cuts. The market priced in the first one, which is why it didn't have much of an impact. If anything, it actually crashed the price of Bitcoin, but we have yet to price in the fact that we're going to have 2 more. and possibly 2 more on top of that in the first half of next year. So that's a full 100 basis points of cuts. Bitcoin has not priced any of that in. Something you have to understand about technical analysis is that, first of all, it works. It's mathematically proven. There's been all kinds of computational models building fake markets that aren't even real, proving that these charts and these technical indicators and chart formations, all of them work. They have predictive power. It is a science. That said, you also have to consider the fact that when you look at the history, you have a very bullish Q4. So what does all this mean? This means that in Q4, you're probably going to see Bitcoin rallying back to all-time high. You're probably going to see it rallying back beyond all-time high. Okay? Now, let's talk about the fundamentals. Fundamentally, one of the things that's very exciting to me is the fact that gold is rallying. Well, gold can't rally forever. It's got to take a break at some point. It's going to drop a few $100 at some point. And so when it does, all of that pent-up energy is going to transition into Bitcoin. That's what's going to happen. And it's going to build this insane bull market. Okay, so the definition of technical analysis, to loop back to that, the definition of technical analysis, very simply, is to figure out the underlying intrinsic value of an asset and compare it to the spot price. When we look at things like we have 4 more rate cuts that are not priced in, that increases the underlying intrinsic value of Bitcoin. When we look at the fact that gold is rallying and it's going to crash soon, not even crash, even just consolidate would be good enough. That increases the underlying intrinsic value of Bitcoin. When we look at the crisis of trust that's going on in fiat currencies, that raises the underlying intrinsic value of Bitcoin. When you look at the institutional grade adoption on Bitcoin, that increases the underlying intrinsic value of Bitcoin. But what's Bitcoin been doing? Bitcoin's been doing basically nothing but trading sideways with like a slight upwards trend this year. What is it doing? It's building a gargantuan support architecture around $100,000 in the range, plus or minus $20,000, around 100K. And it's going to use that to launch itself straight to 200. And it's going to happen faster than you think. And so you have to understand the technical and the fundamental analysis say the underlying intrinsic value is way up here. Spot price is down here. What gives? Well, that means that the higher the underlying intrinsic value is, the lower the spot price, the more violent the correction back to the underlying intrinsic value becomes. This is basic technical analysis. This is like the definition of it. If you look through the CMT, if you look through all the books, if you look through all the history of TA, this is like the basis of it, is you use analysis to figure out what a market should be valued at, and then you look at what the market is valued at, and you trade the difference. And the difference is Bitcoin short-term should be trading at $200,000 to $250,000. I didn't even mention M2 supply, by the way. Long-term, it should be trading at $1 to $10 million. So it's the most obvious trade of the century. And so if you want to succeed in that trade, then I want to kind of bring another layer onto it. Because there's another way that you can succeed with Bitcoin, and that's taxes. You see, one of the things that I don't like is I don't like paying taxes. I don't know about you. I hate paying taxes. I cannot freaking stand it. The government sucks with money. That's part of the reason I'm buying Bitcoin, because inflation is a form of a tax. You put $100,000, heck, you put $100 under your bed, Uncle Sam comes and takes 2% every single year. At least that's what they say. But what they're actually doing is they're taking 7-8%, right? Through inflation, through M2 money growth, right? They are stealing your money from taxation. They're not using it well. I mean, there's all kinds of things that we can say the government does great at, but they're not using it very well. I don't want to pay more taxes than I need to. Of course, I'm going to use every single method that I can to minimize my tax bill. I have all kinds of strategies, because if you look at your expenses, normally the biggest line item in your budget is the amount of money you pay on taxes. If you went to HR and collected your paycheck, and before you walked out the door, you had to go by Uncle Sam's office and give him 20% of your paycheck, there would be an uprising tomorrow. But we don't even see it, because it comes out through automatic withholding, so that you don't even notice it. But it's there. And when you calculate your actual taxes, oftentimes, depending on how much you're making, you're paying between 10 and 40% of your income in taxes. And so we want to find a partner that helps us to mitigate that. And I posted something about a month or two ago, and I said, what are your favorite legal strategies to avoid taxes? And funnily enough, one of my good friends over at iTrust Capital responded, and all they did, they just raised their hand. And I said, touche. And so that's why we brought iTrust Capital on, because I firmly believe in this company. I use this company, and I'm very excited to tell you about them. Now, you've probably heard of iTrust Capital before. They are the most trusted IRA provider in the cryptocurrency space. But a lot of things have developed over the last several years that I want to tell you about. One of them is their PCA accounts. So you kind of know you have an IRA, it's tax advantage. I'll talk about more of that in a second. But one thing I want to share with you that iTrust Capital is doing that's really cool is something called a PCA account. So think about it like this. Let's say you build a bank vault, and there's only one way inside of this bank vault. But for whatever reason, crooks and thieves do not have access to the door. It's not, oh, well, they can't blow the door off. The door's, 3 feet thick of steel. No, they can't even get to the door. That's basically what the PCA account is. Basically, you are the only one that can get inside of this vault. The way this works is very simple. You have your accounts in iTrust Capital. These are called PCA accounts or premium custody accounts. It's a bit like saying ATM machine, ATM. Just you have a PCA. It's a premium custody account. You are the only one that's able to get in, and you're only able to get out through US dollars. So you put in your currency, you put in your US dollars, you put in your cryptocurrency assets, and you're only able to withdraw it through through USD into your bank account. The reason that that's so very important is because the most common way that you get hacked, and hang with me here, the most common way that you get hacked and lose your funds in the cryptocurrency market is from people basically hacking into your account and they just withdraw it to whatever address. Well, with iTrust Capital, there's only one address that you can withdraw it to, and that's your own bank account. It's not a wallet. You can only withdraw out of these accounts to your bank account. So this is something that you want to get alongside the Roth IRA and IRA accounts I'll talk about in a second. But this is something that you want to get, iTrust Capital. You want to sign up for it, and it's a part of a diversified risk management strategy for your portfolio. You want funds in a bunch of different places so that if you get hacked, hackers can't take all of it. One, because King Solomon taught, don't put all your eggs in one basket, right? In Ecclesiastes. But two, the reason that this should be a part of your strategy is because you can only withdraw your currency from this PCA, premium custody account, into your own bank. A hacker, if they got into iTrust Capital somehow, they guess your password, whatever, they get through all of your two-factor authentication. They cannot add a wallet or a bank account to send your funds to, because the funds, with the way it's set up, can only go into your bank account. That's why it's so important. Now, also, of course, you guys know about the tax advantages of Roth IRAs and traditional IRAs. Traditional IRA, you get an immediate deduction from your taxes. Roth IRA, you end up not having to pay taxes on withdrawals. You're investing with post-tax money. So for me, I max out our Roth IRAs on the first day of the year. Every year, there's a certain maximum. It's like $7,000, $7,500. I think it's $7,000 this year. It'll be $7,500 next year. I max that out first day. First day, before I invest in any other account, before I invest in a brokerage account for stocks, before I invest in Bitcoin and cryptocurrencies, I max out our Roth IRAs, my wife and I, so $14,000 in total, day one. That is the first thing I max out. So this is the very best tax advantage account that you can get in the United States, is IRAs and traditional IRAs. And we'll talk about more of those in future content. But you also have the best investment, which is Bitcoin. The reason that iTrust Capital is so beautiful is because you combine the two. You get the best tax advantage accounts, and you get the best investment, and you combine them. This is why this is such an obvious integration for our channel. I'm very excited to be working with iTrust Capital. So if you have not already, make sure to sign up for iTrust Capital with a link in the description box down below. There will be more information coming very soon. But if you sign up and you fund your account, you're going to get $100 for free. Also, by the way, you can transfer funds from your other IRAs, whether they're with Fidelity or whether they're with whoever. You can transition them over to iTrust and fund them, and you can actually buy Bitcoin and cryptocurrencies inside of your IRA directly, not the ETF. Not the ETF. We're not talking about ETFs. We're talking about actual Bitcoin and cryptocurrency that is custodied there. Okay, so very, very cool partnership. Very much looking forward to giving you more information about iTrust. So make sure you sign up with the link in the description box down below if you have not already. Guys, I hope you did enjoy today's video. If you did, make sure to hit that like button and subscribe to the channel. I firmly believe a massive, massive breakout is coming to Bitcoin very soon, and I don't want you to miss it. So make sure to subscribe to the channel and stay tuned for more content. I love you very much. Have a wonderful day. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.